Hello folks, this is Huskins, your Forex mentor. Today's video is going to be very important because it deals in trading two different trade plans for the same news event. I'm going to share with you my trade execution on the trade plan which I had created, and then I will share with you the trade plan which I had posted a few days ago, which showed what my student had created. Now, the trading plan which I personally had created was that I'd be looking at the 5 minute US dollar chart. Okay, I'll add the Euro USD price overlay. I'll wait for 5 minutes into the news and see the 5 minute news candle. If I have a buy candle, I'd consider going long, that is short on the Euro USD. If I have a sell candle, I'll consider going short on the US dollar, that is long on the Euro USD. So that was my own trading plan, and let us see what happened. So this trade was even profitable last month. So this trade was profitable six of the last six instances. So let me just show you what actually happened. So this is the euro dollar index, and we were waiting for the news. And at 8:30, when the news came out, it caused the US dollar to drop down. This is the 5 minute US dollar index chart, and this is the 8:30 news candle. So 5 minutes into the news, the Euro USD, the US dollar index falls down, gives us a bear candle. So what am I going to do based on the trade plan? Simple. I will have to buy, go long on the Euro USD. It's right here. If a sell candle, consider going short on the US dollar, that is long on the Euro US dollar. So now let us see what happened. So I have, based on the US dollar index, I've now decided to go long on the Euro USD, and this is the Euro USD before the news. And 5 minutes into the news, we this is corresponding with the short movement on the US dollar index. This becomes a long movement on the Euro USD. So buy from right here. Uh, Let me put in a line, horizontal close right here. Okay, so buy from 1.2200, and we can see that it kind of went up, you know, quite a bit. So that's trade plan number one. Okay, and now I personally bailed out at 30 pips, but this trade plan would have easily made 60, or even even more, even 90 pips. But I personally bailed out at 30 pips on this particular trade. I'll tell you why. um, so now that's trade plan number one, same trade event. Now let's look at it from my student's perspective. So I will share with you the trade plan which my um, student had written up, and this is how he said that we'd go about trading. We'd go about trading. Based on his trade plan, we were basically to trade in the direction of the 200 SMA. Um, After it crosses the 21 SMA, and it gives us two distinct signs of making a proper cross. I'll try and explain it to you. When we look at the chart. So this is the 200 SMA. So right now, I feel that we are waiting for the news, and whatever happens with the news. Right now, my understanding is, according to his plan, that we'd be going short. So let us see what happens in the news. Okay, so the news causes the price to go, Euro USD to go up. This is where I bought. the Euro USD. But according to his trade plan, which I shared with you all on the Forex Peace Army website, is that we are looking for the price to go above the 21 SMA and now close back below the 21 SMA for a sell trade. And if we have a sell trade, we have to look at for two conditions, which I will share with you in just a moment. So price goes above and it continues to go above, and that's where I personally exit my trade with a 30 pip profit. But any case, now the price has gone above the 200 SMA. So now the outlook has changed. The outlook is no longer that we will be um, uh, we will be selling the euro US dollar. Now that the price has crossed its the 200 SMA, we'll be looking to buy the euro USD. Okay. um, so but again price comes down and it closes below the 200 SMA. So now again we are looking according to his trade plan, we are looking to sell the euro USD. Why? Because we have to trade in the direction of the euro USD. But he said that there are two distinct uh, uh, filters which we need to have. The filter number one was that he wanted to make sure that there are two red candles below the 21 moving average, if in case we're going short, and two green candles above the 21 SMA in case we are going long. That was condition number one. The condition number two was that the 21 SMA needed to be in the same direction of the trade. I mean, if we're going short, it should have been below the 200 SMA, and if we were going long, it should have been above the 200 SMA. So now let's see what happens. Now, according to his trade setup, we should be looking at going short right now, provided we get another red confirmation. And let's see what happens. We don't have another red bar. We're waiting. If we get another red bar, we should go short. Okay. But right here, we get another red bar. That's awesome. We get another red bar. So should we go short from here? The answer is no. Now, why not? Because where is the 21 SMA? The 21 SMA has already crossed the 200 SMA and it's not in the same direction as our proposed trade. So again, we do not have a short signal because the filter hasn't yet been met, and this has yet kept us out from a short trade. So let us continue and see what happens. Now the price has crossed again above its 200 SMA, and now if the price has two green candles above the 200 SMA as well as the 21 SMA, it is time to go long. So let us see what happens. So now, according to his trade plan, we have to trade in the direction of the 200 SMA. Price is above the 200 SMA, so go long from here. Plus, we have two green candles above the 21 SMA, which is this green candle here and this green candle out here. So we go long according to his trade setup. We go long from let me put the line in close. So we put the line in from right here. 1.224419 is where we should go long from. So let me make sure that we have a horizontal line right there. So 1.2241 is where we long from, and he said that we'd have a 31 pip or a 30 pip stop. So a 30 pip stop would be at about 11ish. At about this below these lows is where the stop loss would be, and based on that trade plan, let's see what happens. The market continues to push up for another 30 pips, and according to the trade plan, which he suggested that we take profit of 30 pips right there. So we take another take profit of 30 pips. Now, I shared with you this video because there are two distinct trade plans, two different points of views, and two different profitable trades. One was a trade plan which I had shared with you last month, and one was a trade plan which I had shared with you a few days ago, uh, based on what my student had sent me. Both of them turned out to be profitable, both of them from different perspectives and different point of views. I hope you like this video, because that's what foreign exchange is. Foreign exchange is not trying to mimic what I do. The foreign exchange, the way to success in foreign exchange is to get a concrete grasp of how the markets move, make a trade plan according to what you think is best suited to your own needs and what you see in the markets, and execute that trade plan rather than on relying on somebody else. The reason why I share with you various different trade plans is so that you become a better trader. You can have different points of view. You can agree or disagree with certain methods, and some might end up being profitable if you just adapt yourself to that trading environment. I hope you've enjoyed this video. If you have, please click on the like button. Thank you.